Hello everyone, welcome to our training on digital asset trusts. It is my honor and my pleasure to be the main speaker on this training course. In this training, we will briefly, yet concisely and comprehensively give you an overall and in-depth understanding and hands-on knowledges and skills of structuring, setting up, marketing, financing, managing, orchestrating, listing, and coordinating digital asset trusts in the era of digital assets, blockchains, cryptocurrencies, decentralized finances, and non-fungible tokens, which are also known as so-called NFTs. To begin with, please let me take a moment to briefly introduce myself. My name is Sean Jiang, and I come from Hong Kong. I am a fund manager of private equity funds and digital asset funds in both the United States and China. I am also a book writer and a practicing lawyer in both United States and China. Especially, our U.S. fund managing company and my U.S. law firm specialize in those financial and legal segments such as business, commercial, corporate, securities, investment banking and IPOs, investment funds and asset management, mergers and acquisitions, decentralized finances, digital assets and cryptocurrencies, as well as the legal cannabis industries. Last but not least, our team also aspires to become a world-renowned leader in the highly promising and profitable blockchain investment banking industry. Over the past several years, capitalizing on our team's professional expertise and industry experiences, we have helped, advised, managed, and/or coordinated many of our clients to successfully launch, develop, and build up their digital asset funds or digital asset trusts, and in the process, helped many of our clients to achieve great commercial success and to generate and realize outstanding values and business profits in the meantime. Therefore, it is my honor and pleasure to utilizing this opportunity to systematically introduce and share with you our experience and knowledges on structuring, managing, listing, orchestrating, and/or coordinating global digital asset trust schemes, as well as those hard lessons we have learned in the process, in this amazing but highly rewarding journey and endeavor. First, please let me briefly introduce to you the concept of digital asset trusts and give you a high-level and overall picture of digital asset industries. It goes without saying that blockchain, digital assets, decentralized finances, and cryptocurrencies represent the future of not only banking, finance, fund management, and asset management industries, but they are also representing the future of human society. Obviously, two consensuses have been reached by the world to date, that number one, cryptocurrency and digital asset management industries, such as decentralized finances and digital asset trusts, are profoundly reshaping and redefining the basic structure and underlying logic of not only financial industries, but also human society's economic and political structure. And number two, cryptocurrency and digital asset trust industries are representing unprecedented opportunities and chances for us all, both for our personal career and for our personal wealth. Actually, I can say with certainty that at this stage, this is the #1 most promising industry for any ambitious young minds in the world to enter into. Essentially, digital asset industry is the brand new continent waiting for each and every one of us to discover, to explore, and for all of us to conquer. Just like the one continent that Christopher Columbus discovered, explored, and conquered more than 500 years ago. Actually, digital asset and cryptocurrencies as an industry levels the playing fields for all ordinary players from all around the world, like you and me, who come from ordinary class and who are not born with a silver spoon in our mouths. It gives us all a chance, an opportunity to cooperate and to compete on an equal footing with those world-famous players and big-name tycoons. Just as both Elon Musk, the tech titan, and Cassie Wood, who is the famous hedge fund tycoon, have both said repeatedly, blockchain and digital assets are definitely disruptive and potentially subversive forces for the world and for our future. Certainly, they will transform, transpire, and transcend the traditional financial industry and the traditional way of wealth creation, value storage, and wealth and value exchanges for human societies. So next, let me briefly talk about what is a trust and what is a digital asset trust. Under the Webster Dictionary, the word trust means assured reliance on the character, ability, strength, or truth of someone or something, or one in which confidence is placed. However, in the context of investment communities, a trust or a trust scheme generally means a fiduciary arrangement that allows a third party or the trustee to hold assets on behalf of a beneficiary or beneficiaries. The person who transfers assets into the trust is usually called the grantor or the settler. Trusts can be arranged in many ways and can specify exactly how and when the assets in the trust shall pass to the beneficiaries. In the real world, especially in common law jurisdictions such as the United States, United Kingdom, and Hong Kong, trust is a very, very useful, flexible, and prevalent legal tool and legal structure to achieve and realize many purposes of the relevant parties, especially the grantor or so-called the settler. Actually, there was a time-honored old saying in common law legal systems that I quote, "Trust is so useful, so flexible, so versatile, and so glamorous a legal tool that with it you could almost achieve anything and realize any purposes you want." And this is why trust is so amazing, so fascinating, so glamorous, and so appealing in the eyes of all wealthy persons and their families, and for all successful enterprises and entrepreneurs around the world. In practice, there are many different types of trusts. For example, there are private trusts, corporate trusts, family offices and family trusts, as well as charitable trusts. People usually set up trusts for various purposes or reasons. For example, many wealthy families set up their family trusts for estate planning, tax saving, or for generational succession planning purposes. This is because trust offers many unique advantages in asset protection, asset hiding, asset allocation, asset diversification, and tax savings. And trust could also serve as a very useful and highly effective way to transfer and or protect family assets between generations and across countries and cultures. That being said, in our training today, we will mainly, or let's say exclusively, deal with and talk about the type of trust that is so-called investment trusts, which is a kind of trusts that are set up by settlers, sponsors, or fund managing companies for the purpose of pooling or raising investors' monies and funds, and use such funds raised from the investors to make investments in different types of target assets, such as equities and securities, shares and stocks, debt instruments and bonds, preferred shares and convertible notes, derivatives such as options and futures contracts, and finally, digital assets and cryptocurrencies such as bitcoins, Ethereum, Filecoins, USDTs, and NFTs, etc. Usually, all this is done under the professional management, sponsorship, and overall coordination of a duly licensed or duly qualified fund managing company, which is usually called the fund manager or investment advisor under this context. Now we have discussed the basic concept of trust. Let us discuss the meaning of digital asset trust. Obviously, as the name goes, a digital asset trust is a trust that are set up for the purpose of mainly or solely investing in and owning or holding digital assets and cryptocurrencies, or financial derivative products or investment vehicles of digital assets, such as bitcoins, NFTs, or Ethereum, which is simply called Ethers. Digital asset trust is a newly emerging and rapidly developing type of investment trust, and that have in recent years gained great momentum and generated really huge investment returns, excess earnings, and outstanding fund managing profits for both investors and fund managing companies around the world, and especially in the United States. Since we have introduced the concept of trust and digital asset trusts, second and next, let me briefly introduce the main chapters and contents of this training. In this training, we will approach the topic of digital asset trusts from legal, financial, and operational perspectives, and present to you all the essential aspects of sponsoring and orchestrating a successful digital asset trust scheme. That is to say, this training will concisely yet comprehensively cover and discuss all the fundamental elements spanning the whole life cycle of a digital asset trust, namely from its birth to its death. Especially, this training will mainly cover and include the following chapters. Chapter 1, Basic Structures and Key Parties to a Digital Asset Trust. In this chapter 1, we will discuss in detail the usual and typical legal structures of a digital asset trust. In practice, an investment fund or a collective investment scheme, such as a trust, may take the legal form of a company or corporation limited by shares, or limited liability partnerships, or take the form of a trust. Each type of legal entities has its respective advantages and disadvantages. Generally, investment trusts offer sponsors, investment managers, as well as investors more flexibilities and certain tax-saving benefits. Also, investment trusts, as a form of indirect investment vehicles, usually offers the advantage of professional management, which means an investment trust will usually have a sponsor or investment manager who will be responsible for the overall day-to-day management of the investment trust, such as making investment decisions, selecting and liaising with professional intermediaries such as lawyers, accounting firms, auditors, trustee firms, and or custodian banks or custodian companies, etc. Therefore, the second major part of this chapter 1 will be dedicated to introducing the essential parties to a typical digital asset trust, such as lawyers, accounting and audit firms, custodian and share registrars, transfer agents, etc. Chapter 2. Jurisdictions shopping. Choosing the proper jurisdictions for setting up your digital asset trusts. After we have decided to choose trust as the legal form for us to set up our digital asset investment vehicle, naturally, the next big question is in which jurisdiction shall we set up our trust? The most common and most popular jurisdictions for us to choose from include, without limitation, the United States, the Cayman Islands, United Kingdom, several other offshore jurisdictions such as Hong Kong, Singapore, Bermuda, etc. Due to our limited time and also for the purpose of not wasting your precious time and energy, we will mainly cover and analyze United States and Cayman Islands as the two most commonly chosen jurisdictions for setting up digital asset trust schemes. This is because, based on our experiences, compared to other countries, the overall regulatory environment of the United States for cryptocurrency industry, as well as for digital asset trusts, are the most favorable and friendly for trust sponsors, fund managers, and for investors in the world. The next reason for us to recommend the U.S. as the jurisdiction of choice to set up our trust scheme is that, obviously, U.S. capital market is the largest and the deepest in the world, and U.S. investors have the deepest pocket and the largest pool of money to invest in the world. Therefore, in this chapter 2, we will explain to you in detail why U.S. is the number one jurisdiction in the world for us to set up digital asset trusts. Not only because its favorable regulatory environment, but also its deep pool of investors, its versatile and innovative channels and strategies for raising money, and publicly market or generally solicit your trust shares or trust units without the burden of, number one, having to go through the protracted and usually expensive process of a traditional IPO, or number two, having to prepare a prospectus for your digital asset trust offerings. Finally, in this chapter, we will also briefly introduce Cayman Islands vehicles because traditionally, Cayman Islands is the jurisdiction of choice for most U.S. fund managers to set up all kinds of funds, and also because Cayman Islands is a common law jurisdiction. Cayman Island funds could also be listed on the U.S. capital markets and exchanges, thereby providing critical liquidity to the trust investors down the road. And liquidity is a very, very important factor in deciding whether our trust could be a success or a failure. Chapter 3. Marketing and Fundraising for Digital Asset Trusts. Comparatively, setting up a trust is not an easy task, but it is also not that difficult. Setting up a digital asset trust is just like if you want to set up a corporation. Even if you do not know the ins and outs of, for example, how to do the paperwork and go through the red tape procedures for setting up a corporation, you could just hire a local lawyer or registration agent to do the paperwork for you. The real question is, we do not set up a trust just for the reason of setting up a company. We set up a company or trust for the purpose of soliciting investors and selling goods and services to make money, and listing the shares and stocks in our company on stock exchanges so that we could sell or transfer our shareholdings in the open market. Therefore, Chapter 3 is very important because in this chapter, we will discuss how to smartly work through the numerous legal landmines and make use of the numerous legal loopholes in U.S. regulatory environment, so that we could openly market and sell or conduct a general solicitation of the shares or units in our digital asset trusts to potential investors in a manner without having to comply with the costly and burdensome obligations of U.S. SEC rules and regulations regarding public offerings of securities. For example, the stringent prospectus requirements, the costly SEC periodical auditing and reporting requirements, etc. As we all know, as of today, almost in any country in the world, if you want to offer or sell your shares or investment products to the investors or investing public in such country, or if you want to publicly list your shares or securities on a securities exchange in such country, one way or another, you must have the pre-approval of such country's securities or financial authorities, such as the SEC in the United States. This is a general requirement under almost every country's securities laws and investment-related regulations. And this is also the case in the United States. However, many people totally have no idea that in the United States, there are several very useful and highly user-friendly exceptions to, or so-called exemptions from, this general requirement. Therefore, if we could fully and smartly make use of such exceptions and exemptions provided under the U.S. laws and regulations, we could essentially achieve our goal of publicly sell or engage in a general solicitation of our shares or trust units to potential investors in the United States without having to comply with the highly costly and very burdensome requirements of a traditional public offering or an IPO. Also, if we could fully and smartly make use of such exceptions and or exemptions provided under U.S. laws and regulations, we could essentially achieve our goal of publicly list our trust units in the United States securities markets without having to comply with the burdensome and stringent SEC reporting requirements. And these two important benefits available to us under the U.S. regulatory environment will substantially reduce our upfront costs and expenditures for setting up, marketing, and operating a digital asset trust. At the same time, these two benefits will also significantly facilitate and accelerate our efforts to market and solicit investors for our digital asset trusts. And this is the very reason for us to see earlier in this training that why the US markets are so amazing, so fascinating, so glamorous, and so appealing for ambitious entrepreneurs and global fund managers. Therefore, in this Chapter 3, we will mainly introduce to you the 4 most commonly used exceptions and exemptions that are available to us under the U.S. securities laws, which is Regulation D exempted offerings, Regulation S exempted offerings, Regulation A+ offerings, which is also called mini IPOs in the market, and finally, U.S. crowdfunding regimes. Legally making use of these exemptions and loopholes under U.S. regulatory environment is very, very critical and important. And this is why we cannot overemphasize the importance of having a smart and experienced U.S. lawyers on your side during the whole process. Please kindly note that here, when I say that your U.S. lawyer should be smart, I mean really, really smart. Not just a book smart, but also street smart. As our training progresses, you will gradually come to understand that a good U.S. lawyer can help you walk through all the legal complexities and the legal landmines and assist you in achieving your goal of commercial success. Actually, lawyer is very important in any commercial endeavors in the United States. If you have a good lawyer, you will find that the whole system in the United States is designed for you, and which means you are the king, the emperor. On the opposite, if not, the whole system in the US is designed against you, and the chances are, during the process, you will become a sitting duck. Good lawyers can tell you how to smartly follow the rules, how to legitimately walk around and bypass the rules, and how to flexibly play by the rules, and finally, how to intelligently play the rules to your advantage for achieving your goals and your purposes. For example, as we all can see, with really good, smart lawyers, even persons as guilty as O.J. Simpson could just escape from the punishment of justice in 1997. Chapter 4. Listing your digital asset trusts. In this Chapter 4, we will discuss how to list the shares or units in your digital asset trusts, so you could sell your holdings in the open market. This is another very important aspect of sponsoring and coordinating a successful digital asset trust scheme. Just like you set up a company, setting up a company in and by itself is not your goal. You do not set up a company just for the reason of setting up a company. You set up a company for making profits. More important thing here is making sure that the company has incoming clients. The shares you own in your company could attract investors and customers. Without clients, it is meaningless for us to set up a company. Without investors, it is meaningless for us to set up an investment vehicle like a digital asset trust. Obviously, when we are looking for investors for our trust schemes, or engaging in general solicitation to raise money, if we do not have a clear path for the future listing of our shares or trust units, it will be far more difficult for us to attract investors, because investors in this case will also need to be convinced that soon after he invests his money, he could also sell his shareholdings in the open market. As explained above, since liquidity is essential for any investment decisions, it is critical that we have a clear path, a practical solution for listing our trust shares or trust units from the very beginning. And we deal this problem in this Chapter 4. For the purpose of avoiding ambiguity, please allow me 1 minute to make a small but critical clarification here. Listing of digital trust units on proper securities listing venues, such as stock exchanges like Nasdaq or OTC markets, is totally different from listing of individual digital assets owned by the trust on any digital asset exchanges, such as, for example, Coinbase, Gemini, or Binance exchanges. The former provides liquidity to investors for their shareholdings in the trust, and the latter provides liquidity to the trust itself for the trust's holdings in the individual or specific digital assets, such as Bitcoins, Ethereum, Filecoin, etc. These are two different levels of liquidity problems, and there is a subtle but clear difference between the two. Traditionally, there are several listing venues in the United States for us to choose from. The most common two are the New York Stock Exchange and the Nasdaq, respectively. However, these two exchanges are defined under the U.S. laws as national exchanges. Therefore, all companies or trusts listed on these two exchanges are subject to stringent SEC reporting rules and regulations. Also, these two exchanges have comparatively higher listing standards, and applications for listing on these two exchanges are subject to high levels of uncertainties and higher levels of upfront costs and initial expenses. Due to these and various other reasons, in Chapter 4, we will introduce and explain to you the importance of U.S. OTC markets as the listing venue of first choice for listing any digital asset trusts. We will also cover such topics as OTC markets 3 tiers and essential listing criteria, respectively. OTC markets major listing procedures and the importance of DTC eligibility. Whether to choose SEC reporting or non-SEC reporting for our projects, etc. As I have explained above, doing things right from the very beginning is far more important and vital than having to making corrections down the road. Setting up a trust is not an easy task, but also not that difficult. Such things as making sure that your trusts are popular and attractive in the marketplace, and having satisfactory customer bases, and also making sure that your trusts could have liquidity by being able to successfully list it on a proper listing venue or securities exchanges in a timely manner. These factors are far more important and critical, and this is where true value of experienced US lawyers lies in. The underlying logic is like this. Setting up a company is not that difficult, but making sure that your company's products could be publicly marketed in the open market to retail buyers is much more critical and more difficult. Making sure your company's shares are attractive to investors is even more so. Making sure that your company's shares could be freely transferable under US laws, and the compositions of your board and management teams are acceptable by exchanges and regulators such as SEC, are far more complicated, and this requires early participation and involvement at the very beginning stage by US lawyers and other local intermediaries. This is the topics we will cover in this Chapter 4. Next, Chapter 5, Management of Digital Asset Trusts. In this Chapter 5, we will cover those major operational issues and matters for a digital asset trust, such as administration and custodian arrangements, accounting and audit matters, investment strategies, participations by investment managing companies, how to value and accounting for your trust scheme's digital asset holdings, such as mark-to-market techniques, etc. Each of these factors forms an indispensable part of running a successful and profitable digital asset trust. Chapter 6, Industry Resources. Last but not least, in this Chapter 6, we will introduce some industry resources for digital asset industry. For example, major global exchanges and wallets for digital assets, securitizations of properties and real estate development projects through digital assets, NFTs, etc. Especially, many real estate development projects and NFT projects have raised millions and trillions of dollars through digital assets funds and trusts. Thank you very much. This is the end of our first class, which also serves as a high-level introduction to our training. It is my honor and pleasure to be the tutor of this training. Wishing you every success in life and career, and see you all in our next class. Thank you.